Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's doing well. Hope everyone had a great weekend. Maybe a little football. My jiu-jitsu fans out there, ADCC was this weekend, so all sorts of sportsing going on. Hope you had some time away from the charts. Time to dive back in. Maybe you caught the weekly Raghee report Sunday evening. The replay is right at the Simpler Trading YouTube channel. And we've got, already what looks to be kind of a wild morning, pre-market, of course. We seem to have a wild morning to kick off the new week. Just a quick look at the calendar. Look, there's not much to say. You know what's coming. This Wednesday, the 21st, we've got FOMC. We are still broadly expecting, and let's just make sure, because we looked at this yesterday during the Sunday open, and we want to take a look at it here about 30 minutes before the bell. And you'll notice that we have, take a look here, 78% probability that we're going to hike 3/4 of a point, 22% that we're going to hike that full point. By the way, it was 80-20, I believe, as we closed Friday, and even yesterday, Sunday evening, it was 80-20. So just a couple ticks higher in terms of expectation for that full point rate hike. Please know that is definitely the lower expectation. This is not necessarily meant to tell us this is what's absolutely going to happen, but this is most likely what's going to happen, and it's most definitely what the vast majority of market participants have priced in terms of their expectations. So that's where we sit as we kick off the morning. All right. So slightly, tiny bit, slightly more expectation for that full point rate hike, which is by no means the dominant expectation, nor even fully priced in. So what that means is if we were to get 3/4 of a point of a hike, well, no big deal. It's not a surprise. It's what we expected, and we got it. It probably would trigger a little bit of a market rally because we've been selling off in a bit, obviously, as the expectations have ratcheted up over the last few weeks. And then if you think about what could happen if we get that full point hike, the full point hike, that's where things get interesting, because a full point hike would be the surprise. That's not what we're expecting for the most part. And then that would create, for sure, weakness in the equity market, strength in the dollar, weakness in the euro, and weakness in bonds, both 10-year and 30, as the yields go up and those contracts, the futures contracts, TLT, IEF, as those go down. All right, so that's the sum total of what we're dealing with before we get to the Wednesday event. So of course, the show is about your questions, and let's see. Oh, we have our quarterly. By the way, for those of you wondering, what are the implications for movement longer term, weekly time frames? What are the implications for how we can position ourselves smartly, patiently on the weekly time frames, and position our portfolios in such a way where we can be opportunistic about the kind of weakness that we are seeing today? And I think we're going to move it to 2:30 p.m. Usually it's 2 to 4, but my Sector Secrets Mastery folks, I'll send an alert out. We're going to move it out to 2:30. We have our quarterly position portfolio conversation coming up, macro, longer term, weekly, that longer term time horizon. So that's today. We're going to do that at 2:30, between 2:30 and 4 p.m. today. All right. So first up, let's start with our questions. And first up is Kevin Rose. Happy Monday. Happy Monday indeed. CCJ, sure. CCJ is double green. Indeed it is. And Thoughts on a long call? Let me move this clock out of the way a little bit. There we go. Thoughts on long calls for 20 at 2667. I'm fine with say 2785, 2730. And yes, if you want to go with say 2660, 2650, that's fine. If you want to use a Darvis, that's great. If you want to use the Darvis at 2825, 2830, that's actually fine as well. I would look for a buy the dip. Absolutely. So a double green is ideally giving us that overall. Now let me switch the layouts here. One of the things that we've been doing a little bit more often in the Sector Secrets Mastery room, and do I have this set up or not? Yeah, so one of the things we've been doing more often in the Sector Secrets room is bringing in things like our V-score, bringing in things like our MACDs when we do have an overall strength environment. But based on the wave and the pullback into it and the overall environment that we're in being above the 200, I'm totally fine with that. I'd likely look at the 26, or I don't know what the, hang on, let me see what CCJ, the chain looks like here. So December, no closer than October on that one. Oh, they're one wide. Great. I would go, as long as there's liquidity, I would go with the 26s or 27s. Yeah. All right. Moving on to N. Lewis, FCG. Thoughts on double green stocks within the FCG like DVN. So FCG, for those of you that don't know, is the natural gas stock ETF. Now, what does that mean? We have UNG, which is the natty gas ETF, the actual commodity. We also have, much like we have XLE for energy stocks, we have FCG for natural gas stocks. And DVN is amongst those. Now, when I want to take a look at what's inside FCG, what I like to do, and I'm sure many of you have seen me use the multi-chart, which is just a flexi grid layout on Thinkorswim with my indicators set up so that I can quickly scan for structure, for relative outperformance, bullish or bearish, by the way, either way, and get a good list. Now, within FCG, and of course, part of this is making sure that we are on top of the weighting, because some of these ETFs, especially if they are not high concentration weighted, which just simply means very small number of stocks have a disproportionate percentage weighting within the ETF. With FCG, you don't have quite the high concentration weighting. It's a little bit more evenly weighted. So these names do shuffle up pretty frequently. DVN's double green, Hess is double green, COP's double green. What else do we have in here that's double green? DCP Midstream is double green. EOG. So there's a lot to like. And I think it's more along the lines of what don't I like than what do I like? And DVN would definitely be amongst them. Sure. Yeah. All right. Nick L. What book or other source do I most recommend for learning about trading psychology? I would say the first thing as far as source is journal. Journal your trades, not journal your feelings. Dear diary, the market was mean to me today. Definitely journal your trades. What did you see? How did you respond? What was your plan? Did you follow it? Things like that. So monitor your discipline, right? I think journals probably reveal discipline around planning, discipline around risk, discipline about following the plan more than anything. And then as far as trading psychology goes, probably my favorite trading book on trading psychology is What I Learned Losing $1 Million, by far. What I Learned Losing $1 Million by Moynihan and Paul. And I've had that book on my shelf for probably 25 years. So excellent book. Highly, highly recommended. All right, Dustin, XLU. Sure. Let's talk about XLU heading towards the 100 propulsion. All right, let's see what we have here. I'm presuming on the daily, Dustin. Let's see what we have here. Yeah. So XLU utilities, by the way, heading towards 100 propulsion. The 100, I have the 200 propulsion. I don't use a 100, so I'm presuming 200. Is that too deep of a dive for you to pick up a long call? It's not a matter of whether or not it's too far away or deep a dive, as you said. I love diving, so I like the analogy a lot, Dustin. It's, are we at least neutral, yellow trend when we get there? And frankly, on previous visits to the 200, the price action hasn't really been that respectful of that level. So I'd be hard pressed to say that would alone be the reason to get in. So maybe the gap close, maybe the Darvis, not really sure. Let's see what kind of price action we have when we get there and what the overall markets are doing, because remember, XLU is oftentimes a bit of a flight to safety. So let's see what kind of mood the market is in, if and when we do get there. And then if and when we do get there, I would have to say no. It's not that it's too deep a dive. I don't see a lot of respect for that level on previous hits. So that's my take on that, Dustin. I don't want to ever say a certain level is always going to be blanket, always going to be a level of decision level for me. It's really got to be sometimes, especially if it's something like a 200 where I could see what the past reactions to it were, what then my response will be going forward. All right, next up, Trader Momo asks, FedEx fail. FedEx fail. I'm not sure what that means, Trader Momo. Indicates global recession. Yeah, there was some chatter about that last week, right? I'll be straight up. UPS has far more of the domestic GDP in its pipeline than FedEx does. So for that reason, I would probably consider UPS, United Postal Service, far more important. If they said something like that, maybe they did, I don't know. If they said something like that, I'd likely be they'd probably get my attention more so than FedEx. And if FedEx is heading lower, I mean, clearly we're going to see some sympathetic reaction there. We would also take a look at IYT, right? Transports. Think about where UPS and FedEx are weighted. But no, I'm not really giving a lot of credence to that bit of news. Frankly, FedEx, and this is where I'm going to say this, gang. Is FedEx going anywhere new? Right? It's a move, right? Is it going anywhere new? Yes. FedEx did go clearly somewhere new. And you can see UPS responded. UPS really, again, got drugged down by that. IYT also got drugged down by that. Let me see, DIA or YM, kind of muted response. I'm not really giving that a lot of credence right now. If I hear something from UPS, which again, as a proportion of GDP within their pipeline, I still believe, based on data that I have, that might be a little dated. So I'm going to leave that out there for sure. Did it go somewhere new? It did meet that criteria. It did, affirmative, meet that criteria. But I just don't think FedEx is really indicative of something I'd be terribly concerned about. I'm just not concerned about it. Until we see other markets respond in kind, maybe they will. Do I agree? It's one stock, it's one company. Time will tell, right? Time will tell. I'm not going to make a broad-based decision about the economy or the global economy based on a single stock in the IYT that had a pretty big gap down and drug that sector down. Does that make sense? Let's keep it isolated to that sector until we start to see, if that's a pebble that dropped into the pond, let's see if the ripples go out and how far they go out. So I'm always a let's wait and see. I have no need to be the first, right? I have no need to say, well, I call the bottom first, or I call the collapse first, or I call the top. There's a lot of folks who need that. You'll know who they are because that's all they like to talk about. I've never felt that, on yesterday, we were talking about solving puzzles and that we get rewarded for solving puzzles as traders and investors. And that's what I keep in mind. Is calling a top or bottom necessarily going to pay me? And that's what I'm always running everything through. Is there a trade there? Is there a setup? And can I control risk from that entry level? And if I can, I alert it to my members. And if I can't, I move on. So everything that I look at has to map to, is there a setup that I think that I can profit from? And by the way, you would think, isn't that what all traders do? No, gang. It's some traders like to be able to make grand proclamations about what the markets are going to do over the course of the next few months or the next few years. My question is always, and your question should be too, everyone here, if I put any idea out there like that, Rog, what's the setup? Always ask the trader. So what's your setup? How are you going to manage risk? And you'll find there's usually not one, and they're not managing risk. And so that's where I kind of put that for now. Trader Momo, thank you though for the heads up, because that reminds us psychologically, this market is very much on pins and needles. All right, Tim Warren asks, who and how do they determine rate hike probabilities? The Fed Fund futures. The Fed Fund futures. Is there a video that shows rate hike probability movement over time? I don't know, Tim, if someone's recorded a video like that. But if you want to know rate hike probability over time, just take a look at the Fed Fund futures chart over at the CME FedWatch tool. That'll give you a really good idea of dot plots. There is a historical link there. Let's see. If you take a look at historical, that might give you some of what you're looking for. You can look at the prior hikes. Maybe that will give you some of what you're looking for. You don't have to look at them all at once because, gosh, that'll make you go blind. But it's the Fed Fund futures. It's actually a futures contract. All right, moving on to Nick Hodge. Good morning. Do I consider max pain in my tradings? Nick, if I were more a writer of premium, if I were more a seller of options, I think max pain would be not just something to consider, but it would be integral to the trading plan. But since I am not, and since I never risk max debit, no, it really doesn't. I think that open interest, as a general rule, is something that I watch. How much size is at the different strikes on both the put and the call side. But I would think for traders who focus more on writing premium, which is not me, I'm a cash account, long call, long put, basic, simple carbohydrate options trader. It works for me. It's easy. It makes it very simple to follow day trading style without multi-legs and considering credit. By the way, I'm not going to say all traders, but most traders use credit strategies, credit collecting strategies, spreads, because the underlying stock in or option that they are trading is usually too expensive just to buy long calls and long puts. That's usually been my experience. There's a lot of strategy to verticals and spreads. But for the most part, the way that it's really been used by retail traders is just to make the trade more affordable. And to me, why not stick with affordable long calls and long puts as we build our account, as we build our portfolio, as we build our experience, our confidence. All right. So no, for me, and it's not that it's not useful. I just don't need it for the style of trading that I use. All right. How do I find the daily average movement for the SPX? I think Bot's working on that, JR. I know a lot. I don't trade the SPX, nor do I frankly intend to. SPX is interesting. It's a derivative of the S&P. SPX options are a source of fascination and volatility because they're European style options. And I don't have a lot of time to dive into that today, but European style options are very different from American style options in that they can only be exercised on the day that they expire. Hence that crazy volatility that we see. I think the bot is working on that for the HPMRs at some point because a lot of folks have asked for HPMRs and DPMRs on SPX. But I would say, if you want to know what the SPX is going to do, more or less, keep an eye on the ES, but it's in the works. JR, it is in the works. All right. So thank you for the question. All right, gang. As always, thank you for being here for Charts and Coffee. At 20 minutes flies by. My Sector Secrets Mastery folks, we have a longer session today. I'm going to see you 9:20 to 11 a.m. And my day trading folks, I'll see you all in the day trading room in just a moment. Be good to each other, gang.